Hi everyone, let's talk about Atea Pharmaceutical. It's a clinical stage biopharmaceutical company that focuses on discovering, developing, and commercializing antiviral therapies for patients suffering from viral infection. Is it a buy the dip? Since this fell 63% so far within this trading day, and because of the latest news, so we see that the phase 2 Moonsong trial result did not meet primary endpoint in the overall population of a patient with mild or moderate COVID-19 who were mostly low risk and mild symptoms. And yeah, so it's not meeting the endpoint. That's why they fall so hugely. But anyway, there's a not so bad from the fundamental side, and technical analysis will show that future growth is 6 out of the 6, same as the financial health. There's also past 3 out of 6. This is actually trading 92% below the site's fair valuation. That is meaning that the analyzed price target is pretty highly up, so $58 per share in the tip ranks. That is meaning almost 300% upside. Market Watch has even better price target, $61, in low scenarios 55, average 58.67. The earnings are forecasted to grow almost 60% per year. That's huge, and they became profitable this year. And since this is a biotech company, this is pretty unusual on the risk side. The share price is highly volatile since we saw this drop that is happened today. Anyway, this is technical analysis shows that this is midterm trending downside. If we open, for example, 1 year return, the price dropped already like within few months. So as you know, many of the biotech companies had the peaks back in mid-February, and since that this price dropped already 83%. So this is the volatility that is going on many companies, not especially in the biotech, but in other industries also. For example, cinema or etc. So based on May's numbers, they had actually been profitable once in from May to October, for example. If we open the max frame, this is all-time 2,522% up, and those who invested in early stages could profitable. So this is pretty enormous and huge profits there, almost 15,000% from the November 2017 till February 2021. And since that it dropped actually very fast. And this is one of the things. So there's a November 2017 and the next slide is October 2020. But anyway, the volatility is huge. They had a lot of the product updates, earning updates, and by the way, they have another drug pipelines showing there. Yeah, there's a Moonsong and AT752, which is on the phase 1. But anyway, about the company, 2012 founded, 49 employees, market cap showing 3.36 billion. This is basically based on yesterday's close. Earnings 35 million, revenue 175. P ratio still pretty high based on yesterday's trading day. And valuation side, so we see, yeah, actually this one is good. Simple Wall Street showing their fair valuation should be around $553. I'm not sure how awkward this is, but I guess this is not even near to what the tip ranks or market watch showed. Future growth for the company, as I said, 60% almost. Earnings per share growth is forecasted as well as to grow. They became profitable, which is very good. And past performance, 10% historical pharmaceutical and biotech annual earning growth. This is actually for the industry. Anyway, they have high quality earnings, and financial health side is showing that they have a lot of cash, 816 million, equity just slightly less than 600 million, debt zero, so debt free company. Therefore balance sheet looks mostly green, actually green. They're not paying dividends, and the insider transactions are showing that there's on both side recent transaction. This is on a year frame. Last transactions were in September last month. Yeah, so there's the insider transactions. This Brain Capital Life Science investors decreasing. First September 24 million and 28 million in 22nd September. And ownership breakdown showing institutions holding 55%, VCP firms 14, general public 12, insiders 10, hedge funds 7, top shareholders. So do we find here? Yeah, actually Brain Capital Life Science investors are here, decreasing 32%. Vanguard increased 309%. Also the BlackRock increased as well. Others are, yeah, so there's action on both sides. And the simple safe dividends shows that shares outstanding, as usually for the many of the companies, increasing, and total sales increased as well, so not so bad. And investing.com summing the stock for long-term investors as a neutral. Anyway, thanks for watching this video. Subscribe to the channel, like the video or dislike the video, and see you in the future one.